Welcome to TMS Insights in the middle of reporting season in August 2015. We've been pretty busy with all the reports coming out, and we're going to bring you some of the news. And it starts with what came out last week from ANZ and continued with Commonwealth Bank today being Wednesday. Ben, two of the big banks raising capital has put pressure on a lot of the other banks.
Yeah.
But again, pretty good pricing and good opportunities.
Yeah, and I think ANZ were pretty cheeky. You know, they actually don't report in this earnings season. They got in ahead of CBA, realising that they probably get it away at a better price, which it looks like they have. Different structures. CBA a 1 for 23 rights issue at $71.50. So any Commonwealth Bank shareholders will be able to participate in that. Whereas with ANZ, it's a share purchase plan. Regardless of your holding size, you can buy up to $15,000 of shares at a 2% discount to the average sort of share price over a trading period. But yeah, I think, you know, this was widely anticipated, but it's amazing that the market can still be shocked when it happens. And that's what we've seen. And
I guess just to reiterate there, about a $3 billion raising for ANZ, $5 billion from Commonwealth Bank to meet APRA's core equity ratio requirements for next year. So they're getting ahead, both of them. But again, like Ben said, we knew about this for some time. It's happened in this period and is providing that sort of big sell-off to accommodate that, because that money's got to come from somewhere. Again, so it's brought the market down, Ben, and the other banks with it. But overall, this is a good thing for the banks, good for ANZ, good for Commonwealth Bank. It restores their equity ratios and makes them safer investments, really.
Yeah, absolutely. And you know, as you rightly said there, we probably had two factors which have driven the market down recently. Whenever $8 billion needs to be raised in a very short period of time, fund managers are forced to sell other stocks in their portfolio to fund it, and hence we've seen pressure across the market. Yeah. We've also seen some pretty extraordinary sort of things out of China, where the currency has been manipulated against the US dollar the last 2 days in a row now. That's seen a big drop off in the Australian dollar, as is sort of a proxy currency for China. And with that comes offshore investors selling out of Australia on the concern that their US dollar denominated holdings are falling in size. Again, I think probably a bit of a short-term liquidity factor rather than something that clients really need to worry about too much.
Yeah, exactly right. Certainly one of the C's was China. We had the Commonwealth Bank result. They're talking about results specifically now. $9 billion plus, so above expectations, a good set of numbers. The other C's that reported, CSL. Now that was a very good result. It hit $100 only a bit over a week ago, Ben.
Yeah.
But it couldn't quite meet very heightened expectations.
Yep.
Still, we're on the conference call, very impressed by what they're doing.
And I think this is true of quite a lot of stocks, Jeremy, is that the higher quality, I guess, higher expectation companies, even in delivering on what they said that they would, you're still seeing these shorter term corrections as the market was hoping for more. I think, you know, we both listened into the result with CSL today, and probably the thing we walked away with as being most optimistic was not what's going on right now, but in 2017-18, there's some really big new product releases coming for the company. This coming year, in 2016, they'll be investing ahead of that. So this year might be a bit of a slower year, but with potentially a really good pickup. I mean, the CEO was very upbeat about 2017.
And they made that Novartis flu acquisition. That division will grow within the group and will be renamed Securus. It'll be headed by the CFO. It's going to be something which you can see that we're going to hear some very good things in a few years' time.
Absolutely. Yep.
So that was CSL, a good set of numbers there. Car sales reported today. That's been one we've liked for a long time. Again, you know, good numbers, good growth in the business. Did come down in the aftermarket, heightened expectations.
Yep, I think so. And also I think maybe in this case, consensus analyst forecast for 2016 might be a bit too high versus where the company is guided, but the company over the years that we've owned it is conservative. I think we both, again, would say that there's some areas outside the core car sales business which could become the next big earning pushes in the coming years. And the stock still looks to be doing well to us.
Yep, no, that's it. They've got a lot of investment in R&D. They call them verticals, and we believe that they've got a lot to talk about there. We heard from Computershare, another C today. The numbers there were reasonable. Quite a cloudy result, so probably not our preferred in that space. Cochlear was yesterday. Again, you know, that was some great numbers. And Chris Roberts exiting the CEO's role has prepared the groundwork for the new CEO very well.
Absolutely. He's been there at 12 years at the company after being at ResMed prior to that. And, I think he's done a fantastic job. I think with Cochlear, the reason for the reaction there was that their major competitor had an earnings downgrade a few weeks or so ago, and they placed that on Cochlear. So everyone was sort of thinking Cochlear could come out with an amazing job here. Yeah. It came in strong, but not as strong maybe as hoped. But still, company's bullish looking forward.
And what's interesting, I guess, to just linger on Cochlear momentarily is just the market reaction. We saw a very pronounced sell-off immediately and it bounced back. And we've seen that in reporting season on a number of stocks, Ben.
The volatility there's around these results is extraordinary. Yeah. I mean, Cochlear was down 14% after it reported. It closed down, 6 or 7.
Yes.
And, CSL was trading under $90 when it reported. It was back at $93 within 3 minutes. I mean, there seems to be a lack of liquidity when results are first coming out. And I think one of the reasons is we get given an 80-page report that we've got to digest generally in about 15 to 20 minutes. And it's just too short a period of time to work out, was this good or not?
That's
and,
right.
So then you're getting these real swings.
And different reactions.
And you've got to look through that.
You do.
Of course.
And we do, but it's just to explain to the client that is important there. We've just got off the line from REA Group, which, again, some really impressive numbers and some good commentary about the state of what you would imagine, the average person would imagine, is a very healthy property environment, good for REA, but it throws up its own challenges.
Absolutely. I mean, but the REA still managed to grow its earnings by 24% in the last financial year. That's probably one of the strongest growths out of any stock in the market. Share price again got sold off on the back of it, but it did have a bit of a bounce. The strong housing market has led to less listings on their website. Yeah. Anyone you speak to trying to buy a house will tell you there's very little for sale.
Yeah.
And that's really hurt them. Listings creates revenue, creates profit. But one thing I took out of the earnings call is Tracy Fellows, the CEO, said that in July they had their best month of listings for the second quarter.
Yeah.
And she said that's hopefully will continue into the second half. Might be a sign also the property market's starting to slow down, and also potentially price increases to come again in January 16. So if you start to see listings growth, potentially some price increases another 6 months down the track, 2016 could be a much better year, even though 2015 was a great year for REA.
Yeah, exactly. One of the things we took into this reporting season we were looking for is how the overseas earners would report here. And we heard from Cochlear, which is one of them, and we've talked about a number of them. But both Cochlear and Ansell, which we might just address now, reported that there was softness in some parts of their business globally.
Yep.
They tended to talk about Europe, Middle East a little bit, but American sales are very strong. Talk about Ansell for a moment, because that's been a really well-performed business.
Yeah.
And it was a surprisingly disappointing result.
Yes.
Not that necessarily it leads to a disappointing outlook.
Right. And so the CEO, who I've got to say wasn't the most upbeat CEO I've heard on a presentation. The currency impacted them in that a lot of their cost currencies, so where they produce their gloves and protective gear, are linked to the US dollar, such as the Vietnamese dong, the Thai baht, etc. And then a lot of their markets, euros, Europe, their currencies fell heavily against the US dollar. So it really messed up their accounts. And they also reported that in the second quarter of this year, Russia and Brazil both fell off a cliff. Yeah. And they do a lot of work in industrial protection in those two economies. The CEO said, we hope we're at a bottom, but we're not sure. And subsequently, I think the company was quite conservative with their guidance because they weren't too sure where that's headed. They are reasonable markets for them. But, I think this has been a great long-term business to own. And currency, I think, is something you've got to look through again, a bit. It could
particularly
work in their
with those
favour,
currencies, smaller economies, Asian economies, very volatile currencies.
Yeah.
As long as there's the underlying earnings growth, I think that's a really important thing.
Absolutely. And I think there's still plenty to like about that stock.
Yeah. Everybody will know that companies do give guidance about where earnings might be. And it's interesting for a couple of companies that reported in the last 2 days how they've actually exceeded lowered guidance. So we're talking about maybe Green Cross and then Primary Health, which reported over the last 2 days. 2 stocks which gave guidance that, hey, our profits will be lower during the May-June period, and then came out and beat those numbers. So it's not the worst way to do things, but it's quite interesting. And Green Cross clearly developing very good growth there, over 40% there in their earnings, with more growth to come next year. And Primary, which has done a strategic review, which we listened to today, they've divested their Vision Eye Institute holding, and they're going to build more super centres around Australia and New Zealand. So they're getting very good returns out of medical centres. And under new CEO Peter Gregg, have got a renewed focus. So some interesting stocks,
Absolutely.
The big ones.
And a couple of decent share price reactions in a very soft market today. So and we were expecting, we weren't so sure about those two, but it goes to show it is often about expectations as opposed to the quality of the result.
Yeah, that's right. Now, there's been plenty of reports, plenty more to come. We'll bring you up to date with more again next week.